Good morning to everyone. This is Kevin Warsh. Thank you for being with us today. We're excited about the opportunity to discuss America's economy with you. This is really about the kitchen table. People across our country want to have confidence in our institutions that your nomination goes in the direction of reinforcing why they should have confidence in the institutions. You've been nominated by the President to be the chairman of the Federal Reserve System. The Federal Reserve plays a powerful role in our economy. Monetary policy choices made at the Federal Reserve can affect the Americans' ability to buy groceries, whether or not they can afford a home, how far their paycheck goes, especially at the end of the month. And in South Carolina, I hear all the time how families are working hard, doing everything right, and still feeling squeezed. Bidenomics made prices go up, and paychecks have not kept pace. Too many parents are stretching every single dollar they have just to cover the basics. And too many workers are wondering when the economy will start to feel stronger at their kitchen table, not just on paper. Congress, President Trump, and his administration are focusing on fixing the disastrous mistakes of Bidenomics to restore Americans' confidence in our economy. Through efforts like the Working Families Tax Cut bill, we are helping Americans keep more of their hard-earned money. Compared to the average tax return under President Biden over 4 years, the average return is up 24% since then. Just in the last year, the average tax return is now around $3,400, an 11% increase because President Trump and his leadership decided to focus on hardworking Americans who are struggling to make ends meet, paycheck to paycheck. Nearly half the country, half the returns filed in 2026 claimed either a deduction for tipped income, overtime earnings, senior citizens, or auto loan interest for major parts of the Working Families Tax Cut bill that every single person on this dais to the right voted for. Under President Trump's leadership, Americans are keeping more of their hard-earned money, about $300 more every month. It is necessary that Congress continues to put money back in the hands of everyday Americans, and that is why it is important, and I want to be clear here, that is why it is important that we confirm Kevin Warsh to be the Federal Reserve Chair. The Federal Reserve has a clear dual mandate to promote stable prices and maximum employment. The policies of the Fed, therefore, directly affect Americans' cost of living and their income. And when the Fed is successful in fulfilling its dual mandate, affordability improves, with Americans taking home more money and paying less for everyday necessities. Unfortunately, in recent years, the Fed has faced real challenges. There have been questions about its decisions, its focus, and whether it has engaged in issues far outside its jurisdiction. Under the Biden administration, the Federal Reserve appeared to move with the political winds, raising real concerns about politics and weaponizing one of the most powerful weapons we have for good economically, the entire Federal Reserve System. For example, under the Biden administration, the Fed pushed climate-focused initiatives only to reverse that climate agenda as soon as President Trump took office. When actions appear to shift with changing political priorities, it can undermine confidence in the independence of this great institution. An independent Federal Reserve is essential to achieving its mission. Markets depend on it. Families depend on it, and that independence must be protected. The American people expect the Federal Reserve to stay focused on the economy, not politics. Today's hearing is an opportunity to refocus the Federal Reserve on its dual mandate to increase economic stability and affordability for everyday Americans. Kevin Warsh is battle-tested and brings the necessary experience from his time as a Federal Reserve governor during the Great Recession. During his first term as governor, he helped our economy through the crisis and restored faith in the economy. He has seen the economy in its darkest days and understands how economic decisions affect job growth, our economy, and the opportunities that we have come to love as Americans. We want every citizen in this country to have a chance to live their version of the American dream. And that means having our private sector economy running as strong as possible, which means your focus has to be on everyday Americans and not politicians, not the political wins, but on everyday Americans who desperately want to restore their confidence in our institutions. Today, this committee will examine the plans Mr. Warsh has for his return to the Fed, this time as chair, and how he plans to lead the institution at a critical moment to deliver lower cost and real relief for working families. For folks back home in the great state of South Carolina and across the country, the goal is simple. They want lower costs and more opportunities. The Federal Reserve plays a key role in bringing prices down and helping wages go up. Confirming Kevin Warsh will make sure that affordability is at the center of our economic agenda.
We should not be having this hearing today. And here's the context. First, over the past year, President Trump has racked up one economic failure after another, and Americans know that. Consumer sentiment just hit its lowest level on record ever. Inflation is rising, and families are paying more for groceries, more for health care, more for utilities, more for housing, all thanks to Trump's chaotic tariffs and one big, beautiful bill. And now his war with Iran is putting American troops in harm's way and further driving up the cost of nearly everything here at home. Second, in your testimony, you said it's perfectly fine for elected officials to state their views on interest rates. But that is not what Donald Trump is doing. The president has repeatedly and illegally attempted to take over the Fed. His bogus attacks on Governor Lisa Cook and Chair Powell were designed to threaten all the members of the Fed to do Trump's bidding and open more spots for Trump flunkies. Why try to end the independence of the Fed? Because Trump's economic failures are causing him political problems, and he wants the Fed to use monetary policies to artificially juice the economy in the short term, and this is his last chance to do that before the November elections. Having a sock puppet in charge of the Fed would also give the president access to the Fed's powerful authorities to enrich himself, his family, and his Wall Street buddies. It could mean granting special accounts to his family's crypto company or bailouts to his friends on Wall Street if they get into trouble. In other words, a Fed under Donald Trump's control creates more opportunities for Trump's corruption. Third, the nominee before us today, Kevin Warsh, is uniquely ill-suited for the job as Fed chair. In our meeting last week, we discussed the 2008 financial crash, where 8 million people lost their jobs, 10 million people lost their homes, and millions more lost their life savings. Giant banks, however, got hundreds of billions of dollars in bailouts. Mr. Warsh was a Fed governor from 2006 to 2011. That's before, during, and after the crash. And he said to me that he has no regrets about anything he did. So let's take a deeper dive into Mr. Warsh's record. In the years leading up to the 2008 financial crisis, He was an enthusiastic cheerleader for credit default swaps and complex securitizations. He dismissed repeated and increasingly urgent concerns from housing advocates across the country regarding subprime mortgages. He refused to use the Fed's authorities to address the risks that were building in the financial system. And when the crisis hit and the economy blew up, Warsh took on the job of Wall Street's personal liaison on the Fed board. He was quick to respond to concerns from Wall Street CEOs, and he worked tirelessly to arrange multi-billion-dollar bailouts for them with nothing for American families. No regrets, he says, no regrets. After the crash, most people on the Fed saw millions of Americans unemployed, people who had lost their homes, and said now might be a good time to lower rates and make the cost of borrowing cheaper for businesses to avoid more layoffs and make it cheaper for Americans who are worried about paying their mortgages or their credit cards. But not Mr. Warsh. Nope. He wanted to keep interest rates high. And he sang the same song for more than a decade, even as the economy struggled. When the job of Fed chair became available during Trump's first term as president, Warsh held on to his high interest rate inflation hawk views, and Trump passed him by. Regretful, he soon reversed course and called for the Fed to pause interest rate hikes. Then, once Trump left office, Mr. Warsh flipped again and was even criticizing the Fed for cutting rates in the fall of 2024. But as soon as Donald Trump became president a second time, Warsh reversed himself once more and began shouting from the rooftops about how the Fed should cut interest rates. Evidently, he learned his lesson. This time around, he sucked up to Donald Trump to snag his dream job. Mr. Chairman, last week, every single Democratic member of this committee asked that you postpone this hearing and instead conduct oversight on the president's role in directing bogus criminal probes into Chair Powell and Governor Cook. The Senate should not be aiding and abetting Donald Trump's illegal takeover of the Fed by installing his chosen sock puppet as chair. It's an invitation for corruption and for economic catastrophe. We have the power to stop it, and we should be using that power. Thank you, Mr. Chairman.
I'll just say it is interesting that we're going to hear from Senator Dave McCormick in his introduction of Kevin Warsh, who was last time unanimously confirmed by the United States Senate. Unanimously confirmed by the U.S. Senate. Dave, the floor is yours.
Thank you, Mr. Chairman, Ranking Member Warren, distinguished colleagues. It's really a great honor to introduce my friend Kevin Warsh and welcome him and Jane here today. Kevin has been a friend for many years. Winston Churchill observed that for great leaders there comes, and I quote, a special moment where they are figuratively tapped on the shoulder and offered the chance to do a very special thing. What a tragedy, he warned, if that moment finds them unprepared for that which would have been their finest hour. Colleagues, I'm here today to assure you, as someone who knows Kevin and who knows this institution, that Kevin Warsh could not be more prepared for this, his finest hour. There's no one more fitting, no one more qualified to face this consequential moment as the 17th chair of the Federal Reserve. Now, I'm not going to belabor Kevin's academic and professional record. They speak for themselves. Instead, I'd like to tell you about a man who Dina and I worked with decades ago and who has been someone I've called a friend for almost 30 years. President George W. Bush famously appointed Kevin to the Federal Reserve in 2006 when Kevin was just 35. He was the youngest appointed board member in history. But President Bush saw in Kevin what I believe you will see in him with your questions today. Wisdom that belied his age, now deepened by experience. A moral clarity even in the most turbulent of times. A sharp and independent intellect, further strengthened by decades immersed in unforgiving global financial markets. And a deep, honest understanding of how the decisions made in the marble hallways of Washington affect the lives of hardworking Americans. Now, I, unlike many on this committee, have seen these virtues on display across decades of friendship. I first met Kevin in the late 1990s when he and my younger brother were junior associates on Wall Street. And a decade later, we served together in the crucible of the global financial crisis. I as the Undersecretary of Treasury for International Affairs and Kevin on the Fed board. For nearly 2 years, we worked hand in hand to contain the damage and navigate the country through the crisis. And I know that then Chairman Ben Bernanke relied heavily on Kevin during those turbulent times, and I did too. And I've continued to seek his counsel regularly in the years since. Now, Kevin came to Washington all those years ago as an outsider, an idealistic young man determined to serve his country, one who has succeeded beyond all expectations. And he returns today as the ideal candidate to lead the Fed at this most crucial juncture. If confirmed, Kevin will inherit a Federal Reserve in need of repair and confronting serious uncertainty, an overextended balance sheet, a poor record on inflation, and a weak understanding of the profound opportunities offered in today's economy. He is uniquely suited to confront these challenges. He brings a reformer's heart. He will shake up a stagnant institution at a time when change is sorely needed. He possesses a deep understanding of markets and is trusted by leaders across the financial industry. But he equally understands the real economy. Born and raised in upstate New York, he knows from personal experience how the actions of the Fed can change the lives of working families. It's no small thing. It's no small thing to know firsthand how an increase in gas prices or mortgage rates or an uptick in unemployment affect everyday Americans. The Federal Reserve must not be ruled by pointy-head economists poring over outdated models and reams of market data. It needs a leader. It needs a leader who understands that the Fed's mandate of stable prices and maximum employment serves a higher purpose, the preservation of the American dream. Now, colleagues, Kevin Warsh has lived the American dream. I know in my heart he will always fight to keep that dream alive for all Americans. He is the right man for this pivotal moment, and I urge you not to get caught up in the politics of the moment and support his speedy confirmation.
Yes, Mr. Warsh, you are now recognized.
Thank you, Mr. Chairman. I appreciate your consideration today. I've known you for quite a while, and I certainly appreciate the many courtesies you've given me, not just since the President's nomination, but long before. It's an honor to be with you, with Ranking Member Warren, and with the entire committee. I'm deeply grateful to President Trump for asking me to take on this public trust, because that's what it is, a public trust. The President believes that real economic growth in the U.S. and real take-home pay will accelerate. I share the President's confidence in our country and its people. America's economic growth potential is rising as we sit here today. I'm also especially happy that my wife Jane is here. She's been with me for many of the most important moments in my life. I'm grateful for her love and her personal accomplishments. I reciprocate that with somewhat of my own love, though I'm a little more stoic than she. And about every 20 years, I reintroduce her to this committee. She sat behind me 20 years ago. And it was almost 20 years ago to the day. And so let me offer today what I said then. Jane, happy anniversary. I'm also thinking of my late mom and dad. They were paying great attention to this hearing 20 years ago. They're no longer with us. But I was always proud of them and the values they taught me. And I hope they'd be proud of me today. We start today with a note of broad agreement. Even though we might have heard different narratives at the outset of this hearing, this is a time of great consequence for the nation's economy. As a former Fed governor and friend or colleague of the last 5 Fed chiefs, from whom I've learned plenty of lessons, I'm particularly alert to the challenges and opportunities confronting the institution that I cherish, the Federal Reserve. To the President, to the Congress, the nation, I owe my best judgment and my most faithful efforts in serving the mission that you and Congress assigned to the Federal Reserve, including full employment and stable prices. The American people are counting on the Fed to deliver on its commitments, perhaps now more than ever. The real highlights of my life are not on my resume, as Senator McCormick said. They include the individuals with whom I worked and from whom I learned. I graduated from high school in upstate New York. I had some exceptional teachers there and some brilliant classmates. I've learned we're lucky in life if we start out with good influences in learning and in character. A public school education gave me both of these, and I'm grateful. I made my way to Stanford and found myself in the company of some of the most highly accomplished economists and policymakers. George Shultz, former Secretary of State and Treasury, was among the great patriots at the Hoover Institution, who I came to know as a teacher, mentor, and friend. He passed away right after COVID at age 100, but I still feel him with me. I could not have imagined a better formative experience than working from and learning from folks like him. I could tell you about all the things I learned, but maybe the most important was to be around people completely devoted to the ideas and ideals of our country. Silicon Valley in the early 90s, another fitting backdrop for all of the things we confront today. I found myself in the right place at the right time. The U.S. was at the vanguard of a new era of technological leadership, and I just looked out my door to see it. Now, in the last 15 years, I've gained deep experience in macro and in markets, working with Stan Druckenmiller. He never held a position in government, but is no less a patriot. He never got a PhD in economics, but I don't know a finer economic thinker. Without their guidance and the guidance of Condi Rice, my friend and I should say my boss at the Hoover Institution, I doubt I would be sitting before you today as the President's Fed Chairman nominee. But I'm certain of one thing. Absent their tutelage, absent their example, I would not be as prepared for the urgent, mission-critical task at hand. In between these bookend experiences, I served quite a while ago as a governor at the Federal Reserve. At the onset of the financial crisis, as Senator Warren said, our central bank played an indispensable role, and we benefited enormously from the credibility that our predecessors had built up and passed down to us, governors of the Fed at the time. In these unusual and exigent circumstances, I saw the Fed and its people at their very best. But I also witnessed an institution that was tempted to play a larger role in the economy and society. So let me be very clear. Monetary policy independence is essential. Monetary policy makers must act in the nation's interest. Their decisions the product of rigor, deliberation, and unclouded decision-making. And as Senator Warren said, I do not believe that independence of monetary policy is threatened when elected officials state their views on rates. Fed independence is up to the Fed. That has 3 implications. First, Congress is tasked with the mission to ensure price stability. Inflation is the Fed's choice. Second, Fed independence is at its peak in the conduct of monetary policy. And third, as the chairman said, the Fed must stay in its lane. I'm committed to ensuring that the conduct of monetary policy remains strictly independent, equally committed to work with the administration and Congress on non-monetary matters that are part of the Fed's remit, and I commit myself to accountability. Finally, I'll just say this, Mr. Chairman. Milton Friedman had a phrase that always stayed with me. He always worried about government officials that lured and hung around with what he called the tyranny of the status quo. Status quo practices and policies are especially harmful when the world is changing this fast. If confirmed as chairman, I will be faithful to the Constitution, to the Federal Reserve Act, and to the very best of the Fed's traditions. I believe a reform-oriented Fed can make a real difference to the American people. And if confirmed, I will seek to create an environment in which the best people do their best work. Candor and goodwill will go a long way in pursuing those objectives. And I suspect this hearing, Mr. Chairman, will put us to the test. It's a real privilege to be here.
Thank you, sir. Kevin, there are so many questions to talk to you about, to ask you about, to be honest with you. And I just want to name a couple of them, and we'll look forward to hearing more on these topics. I will not have enough time to delve into some of the most important issues facing our country. I'll take two of those issues and focus my time. I'm sure my colleagues on either side will have a conversation with you and ask questions about AI. The AI future is going to have massive impact on where we go as a nation. It's got a massive impact on your dual mandate as it relates to full employment. Our production may go up while our employment stays flat. So this is a really important question that at some point we should delve into. I also think that someone should spend some time talking about our balance sheet. We have nearly a $7 trillion balance sheet at the Federal Reserve. Too much attention has been paid to your balance sheet, and not enough attention has been paid to the nation's balance sheet. And I think it's really important for us to dig into that issue as well. Digital assets, the future of finance in the world seems to have a major component of it being digital assets. The market structure legislation we don't want your comment on, but the important role of the blockchain in the future is another really important part of the future of our economy. I will spend some time talking about affordability and the importance of the independence of the Fed. One of the things I've appreciated about your previous comments is the importance that you have placed on the dual mandate, stable prices, which typically comes through the form of interest rate changes, as well as promoting maximum employment. I think those two will become more challenging in the current environment. One, obviously, the second one being the AI and the future of full employment. You've criticized the Federal Reserve for getting too big, mismanaging inflation. I'm sure you know the definition of transitory, so I won't ask you, but I've got a feeling you know, and some of your predecessors did not. Compromising the independence of the Fed. I think we should spend more time on finance, less time on climate change, on politics, on who is or who's not in charge. I think you would agree on those issues, though I will not ask you. I will ask you, however, that under your leadership, how will you steer the Federal Reserve to address the real-life issues of affordability is my first question. And my second question will be about how do you make sure that the Federal Reserve stays out of the lane of external influences?
Mm-hmm. Well, thank you, Mr. Chairman. There's probably no more pressing question than the cost of living. We know at the Federal Reserve that price stability was an objective that you and your colleagues gave to the Fed. So when, over the course of the last several years, especially after COVID, when prices went up to the tune of 25 to 35% for virtually all deciles of the American people, that's an indication that the Fed missed its mark. And we are still dealing with the legacy of the policy errors in 2021 and 2022. Once you let inflation take hold in the economy, it's more expensive and harder to bring it down. And so the fatal policy error going back 4 or 5 years is still a legacy that we're dealing with. We need, in my judgment, fundamental policy reforms to fix it. And while it's true that inflation is less problematic, meaning the rate of change in prices is less severe than it was some years ago, hardworking Americans are no doubt feeling it. I think that means a regime change in the conduct of policy I think that means a different, new inflation framework. I look forward to working with my colleagues at the Fed, if confirmed, to achieve that. I think it means, as you suggested, using tools differently. The Fed has an interest rate tool and a balance sheet tool. My view is the interest rate tool gets in the cracks. It's fairer. The balance sheet tool disproportionately helps those with financial assets. The interest rate tool hits the entire economy. So we need a new framework, new tools, and I'd also say, Mr. Chairman, new communications.
Yes.
I think part of the reason why, after making a mistake in 2021 and 22, the mistake was compounded, is the Fed gives its forward guidance. The Fed tells the whole world what their dots are going to be, what their forecasts are going to be. Well, the Fed's human. Then they hold on to those forecasts longer than they should. I think if the Fed were to wait until it gets into a meeting before making a decision, that incremental deliberation can keep the central bank from compounding its errors. I think these are big changes that are needed, and if confirmed, I look forward to doing it.
So the Fed has been plagued by deeply disturbing ethics scandals in recent years involving at least 6 Fed officials. So it's critical that the next chair have no financial conflicts, none. You have more than $100 million in investments that you have refused to disclose to ethics officials and to the public. So let me ask, do the Juggernaut Fund or the THSDFS LLC invest in any companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles established by Jeffrey Epstein?
Senator Warren, thank you. So let me first share a point of agreement with you. The Fed has 2 tools. One is its monetary policy, and the second is its credibility. And the scandals that you talked about, the ethics
Mr.
problems
Warsh,
you
I
talked
appreciate
about,
that, but I
went to
have
the
very
core of the
limited
credibility
time.
that has hurt the
Could
Fed.
you answer my question, please? I ask. You have $100 million in undisclosed assets. And what I'm asking is, are any of those with this outfit that invests in companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles set up by Jeffrey Epstein? It's a yes or no question.
Senator, I have worked tirelessly with the ethics officials at the Office of Government
Yes,
Ethics.
and you have not
come to an ethics agreement
$100
with
million
them and have
assets.
agreed, Senator, to sell all of
That's
my financial
not my
assets,
question. Mr.
including
Warsh,
the Duquesne
are you refusing
assets.
to tell us if you have investments, for example, in vehicles set up to advance Jeffrey Epstein? Is that what you're telling us? You just won't tell us?
Senator, what I'm telling you is that those assets that you represent at Juggernaut will be sold if I'm confirmed before I take office and sign the oath of office.
Let me follow up on that. Will you at least disclose how you plan to disclose and divest these secret assets? I'm sure you understand that the public might question your motives if, for example, billionaire Stanley Druckenmiller, who you honored in your opening statement, and who makes a living guessing what the Fed will do next, cuts you a massive check for $100 million as you take the oath of office to become the new Federal Reserve Chair.
Senator, as you know, it sounds like your fight might not be with me, but the Office of Government Ethics. I have come to full agreement with them and have agreed to divest all of those assets,
I'm asking you
especially
a very
those that you
straightforward
referenced
question,
before I
Mr.
take the
Warsh,
oath of office.
and that is, will you disclose how you divest those assets, or will you just collect a check for $100 million from someone whose whole business is betting on what the Fed will do?
As I said to the ethics officials at the Federal Reserve and the Office of Government Ethics,
I'll take that as a
I would
no
be
as well.
redeeming my
So
assets
Donald
before
Trump
I take
has
office.
made clear that he does not want an independent Fed. In fact, he has said, and I quote, "Anybody that disagrees with me will never be Fed chairman." And he's made clear that you are his sock puppets, saying last week that interest rates will drop, quote, "when Kevin gets in." Yeah, I think they do. Not when economic conditions change, we'll get lower rates. Not when the economy needs it. Nope. He said, when my guy, Kevin Warsh, is in there, we'll get the interest rates that I, Donald Trump, wants. So independence takes courage. Let's check out your independence and your courage. We'll start easy. Mr. Warsh, did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the Federal
I'm just
Reserve.
asking a factual question. I need to know, I need to measure your independence and your courage.
Senator, I believe that this body certified that election many years ago.
That's not the question I'm asking. I'm asking, did Donald Trump lose in 2020?
And I'm suggesting you in 2020, the Fed made a huge inflation problem, and you certified the election.
So
let me ask
you another question.
Out of monetary policy.
In our meeting, you said you would be independent because you're, quote, a tough guy. Those were your words, tough guy. And you will be able to stand up to President Trump. So let's try it again. Name one aspect of President Trump's economic agenda with which you disagree.
Well, Senator, the Federal Reserve in recent years has wandered outside of its remit, wandered into other areas.
I'm asking for something
That's
you
not something
disagree
I'm prepared
with Donald
to do.
Trump on.
If I'm
Just
confirmed,
one
the Federal Reserve should stay in
economic
its
issue.
lane.
Just one little place where you disagree with Donald
Well, I
Trump.
do have a disagreement, actually, Senator, with the president. I think even this morning he said that he thought I was out of central casting. I think central casting, I'd look older, grayer, and maybe show up here with a cigar of sorts.
Quite adorable. But, you know, we need a Fed chair who is independent. That's the only way we preserve the independence of the Federal Reserve. If you can't answer these questions, you don't have the courage and you don't have the independence.
I agree with you on independence, Senator.
Until you dispose of all the assets you've identified to the Office of Government Ethics, you will not be in compliance. Is that correct?
That's not my understanding. My understanding is that a signed ethics agreement provides duties and responsibilities on me and duties and responsibilities on the government, and that's what the nature of the ethics agreement is.
You have an agreement that within 90 days you will dispose of all your assets. Is that correct?
Senator, I have an agreement within 90 days so that there is no appearance of anything inappropriate, that I would divest all of my assets, the majority of which before sworn in. What I've disclosed, Senator, is all the information that is mine to disclose. I've shared all information about assets that I control and that I can share, which I did much to the satisfaction of the Government Ethics Office.
Excuse me. What you've said is that you will take the oath, if confirmed as chairman, with assets that have already been identified as presenting potential conflicts of interest. Will you agree to not take the oath until you have fully disposed all the assets that you've been identified?
Senator, I'll agree to take the oath pursuant to the terms of the ethics agreement that I struck with the Office of Government Ethics. I don't think anyone could do more than that other than me. I've agreed to divest even more assets so that I will have virtually no financial assets.
The divestiture is totally up to you. You can select what assets you're disposing of, what assets you're keeping. Is that correct? And then still be sworn in as chairman.
The divestiture is up to the agreement that I struck with the Office of Government Ethics.
Who makes the decision as to what assets are divested, you or the Office of Government Ethics?
Both of us. That's why it's an agreement.
Excuse me. I must commend you on the way you can circularly go around questions and not answer them. It's a skill. Unfortunately, it's not a good skill for the chairman or of the Federal Reserve Board. We typically ask questions and expect to get direct, faithful answers. You haven't given them to the ranking member, and you're not giving them to me. So, again, you feel you will not be, you will be compliant if after 90 days you still have a significant number of assets that have been identified as presenting conflicts of interest. Is that your view?
No, Senator. If I were to violate the ethics agreement, I would not be in compliance. If I follow the agreement, I will be.
Well, that's your position. I think others would differ. When you sell all your assets, where are you going to place the proceeds of those sales? I believe that Chairman Powell has placed them in sort of funds which are very difficult to individually influence. Do you propose to do that?
Yeah, I propose to put them in permissible assets that are as close to cash or treasury bills as I possibly can. I haven't selected anything, but it will be as plain vanilla as possible so that there would be no appearance or reality of having any influence. We'll be sitting in something like cash.
Okay. Now, the question of independence is just one that I think will dominate these proceedings. This morning, President Trump was asked on CNBC, will you be disappointed if your new Fed chair doesn't cut rates right away? And President Trump answered, I would. It's very hard to separate President Trump's obsession with rate cuts, his attacks on the Federal Reserve, on Chairman Powell particularly, and your nomination. So this independence thing seems to have evaporated quite quickly between President Trump's statements and your positions. Again, you maintain you'll be independent of President Trump?
Yes, Senator, I do.
Well, President Trump constantly maintains that nobody's independent of him, that it's his morality that guides the whole United States government, including the Federal Reserve, and that you will be someone who will carry out his wishes. Frankly, do you suspect that he chose you because you indicated to him that you want to cut rates?
Senator, I don't know the reason for the president's choice, but I can tell you what I've been writing about for 15 years and what I said to the president, which is
you're going to I'll cut rates if you give me the job.
No, that's not what I said, Senator. Now, the president, as you might know, much like virtually all presidents I've either known or studied, presidents tend to be for cutting rates. I think the difference is President Trump expresses it quite publicly without surrogates or subterfuge, but presidents want lower rates. But Fed independence is up to the Fed. Fed leadership has to make a decision about what's the right thing to do.
No.
In my judgment,
you're a leader. You're the leader. You establish the moral and ethical standards and economic principles of the Fed. And you just pass it off to, well, you know, it's not my job, it's everybody's job. That means it's nobody's job. Thank you.
Mr. Warsh, congratulations. You can't count this as a date with Jane, particularly this one. I think probably the first hearing was a little less acrimonious. I'm not going to ask you anything. You can take a break and get ready for the bludgeoning on the other side. They're going to beat you till you bleed, and then they're going to beat you for bleeding. I'm going to talk about what's preventing me from being in a position to vote for you until we've spent time together in my office. You have extraordinary credentials. They're impeccable. I think the way you're dealing with the ethics issue is strong. Problem I have is where we are right now. And I start by saying I loved your opening statement. I love your focus on the independence of the Fed. I love the idea of Fed independence with respect to achieving the dual mandate, but Fed transparency on so many other things that the Fed does that, frankly, we're all frustrated with, bank examination, supervision being some among them that I think we should have more insight into. Mr. Chair, I'd like to submit for the record 2 executive orders under President Trump, one in 2020 and one in 2025, talking about making federal architecture beautiful again and focusing on trying to preserve the integrity of old buildings.
Without objection.
Thank you. And, Mr. Chair, I will be submitting an analysis, but if we can go to slide 2 and turn it up right. Much has been made about the building project that has Chair Powell under investigation. I'm not going to get into the details except to say that I used to work for a firm that did audit and compliance, so I'm naturally wired to go back from the ground up and figure out what the deal is. Here's what I know. The Martin building has been conflated into this project to make it a $4 billion building. Even if you put the Martin building in, it's a $3 billion building. The reality is what we're talking about is the Eccles building and the East building, for which, bring that up higher, Jack, you're a tall guy so people can see it. These are the overruns. And these overruns occurred in part because the cost of inputs went up 69% since the original estimate. Asbestos was identified. Remediation was required. Pylons had to be built underneath the building because it turns out they used it as a landfill, and they had a water table issue. There were a variety of reasons why this building went over budget. And as a matter of fact, if we put everybody in prison in federal government that had a budget go over, we'd have to reserve an area roughly the size of Texas for a penal colony because of the way government projects work. And the reality is the overage of inflation adjusted was about $730 million, the majority of which seems to be legitimate. Next slide. Not acceptable, unfortunate, but legitimate. Now, what I've really got a problem with, and we're talking about Fed independence. By the way, I think you're going to be independent. You have to be. You got to convince 11 other people to vote with you, at least a majority. It's a consensus organization. You try to get the majority to. Most of these votes are 11-1. So if anybody thinks the president can appoint somebody and you unilaterally can control things, you're going to be an unsuccessful chair if history is any guide, and you've served under some of the best. So I know you're going to do it right. The problem that I have here is that we had some U.S. attorney with a dream, or assistant U.S. attorney, thinking it would be cute to bring Chair Powell under an investigation just a few months before the position was going to be open. This happened this year. Normal course and speed. Here's how it works at the Fed. May the 15th, the term would have expired. We'd be having this hearing. You'd be getting confirmed. Custom also suggests that the sitting chair, even though he has 2 years left on his term, would have exited. But instead, we have somebody who thinks a building project that went over by about $700 million with a lot of what seemed to be justifications for it are holding up this whole process. It sounds like to me somebody over in the DOJ didn't even check with the boss. The boss said on the same night that I said I can't go forward until this bogus investigation is done with, said he didn't know anything about it. So we've got people in DOJ over in the D.C. circuit or the D.C. district doing these investigations. We have got to end this investigation. Big DOJ didn't know about it. The president didn't know about it. Let's get rid of this investigation so I can support your confirmation. Mr. Warsh, the only thing I've found the least bit odd about you is you've never watched an episode of Seinfeld. You've spent so much time at being a rock-solid economist that you're not even taking time away for a little laugh like that. I look forward to supporting your nomination, and I look forward to this investigation being taken down. If the chair wants to have all of our subcommittees start looking at capital expenditure projects for the agencies that we're overseeing, I think that's a great idea. And I'd like to be on a committee specifically drilling down on this analysis. If somebody can prove me wrong, I'd be happy to make a criminal referral. But I don't have the D.C. Circuit tell me a crime was committed when 7 members on this committee said it wasn't, including the chair. Thank you, Mr. Chair.
You're welcome. Only one question. What is Seinfeld?
Mr. Warsh, good to see you. Reviewing your record, I am concerned that your position on interest rates seems to shift with what's politically convenient, rather than based on sound economic judgment. In the aftermath of the 2008 financial crisis, the worst recession since the Great Depression, with some of the worst unemployment in our lifetimes, you were a hawkish voice, expressing concern that the Fed might wait too long to raise rates. I think you got it wrong then, but now you seem to have swung 180 degrees in the opposite direction to embrace lower rates, a view that conveniently aligns with the president who nominated you. You've made this pivot even as today prices are too high. I think we all know that. Our economy works for families when prices are affordable and unemployment is low. That's why price stability is an important part of the Fed's mandate, right?
Senator, yes.
And the Fed uses its monetary policy tools for price stability and full employment. That's the job Congress gave to the Fed. Here's how Ben Bernanke described how the Fed uses those tools. He said, and I'm quoting, "Generally, if economic weakness is the primary concern, the Fed acts to reduce interest rates, which supports the economy. If the economy is overheating, the Fed can raise interest rates to constrain inflationary pressures," end of quote. So that's a textbook model of the Fed, cutting rates supports the economy, but can lead to higher inflation, while raising rates helps to fight inflation, but can limit growth. Do you agree with Chairman Bernanke that that's generally how the Fed can use monetary policy to affect the economy?
Senator, I do agree generally with that proposition, but I'll note at a moment like this, the supply side of the economy is changing dramatically. So the core of what Chairman Bernanke said is a question about what's the economy's potential. As I said in my opening remarks, I think the economy's potential is growing quite quickly, and that makes the decision that you tee up to be a difficult one, and one that the Fed's going to have to dig deep in evaluating what's the right policy choice in the upcoming meetings.
Well, I want to push you a little bit on that in a moment, but right now the Fed has set its main interest rate at 3.5 to 3.7%. Last December, President Trump told the Wall Street Journal he wanted to cut rates to 1% and maybe lower than that by the end of this year. So just to better understand how you think about economics, in the economic model Bernanke laid out, let's say there's an economy with decent growth and no recession. If the central bank were to cut rates from 3.5 to 1% or lower, a massive cut, that would typically push prices up, right?
Senator, unlike many of my colleagues, past and present, I don't believe in forward guidance. I don't believe that I should be previewing for you what a future decision might be. I think it's essential that the Fed make decisions in the room.
Mr. Warsh, I'm not asking you what decision you would make. Obviously, that's going to be up to you. I'm asking you for the framework in which you think about these things. And it seems a pretty straightforward question about what would happen if we reduced interest rates by the end of this year to 1% or less. And under the Bernanke model, and I think almost every economist or most economists would say that that will drive up prices. And so that's what I'm asking you. Would you agree that that would likely drive up prices?
So, Senator, the Fed has two important monetary policy tools. One is interest rates, and the other is a balance sheet that we created in the 2008 financial crisis. Those tools should be working in concert, not at cross purposes. So it's hard for me to isolate one variable when we'd have to have a discussion on the other.
All right.
Sorry.
Well, let me just say this was a pretty clear question about the framework in which these decisions are made. I have heard you talk about how AI may change that calculation. Yes. I will just say, and I think you know this, I mean, I have this, the Financial Times pointed out the economists reject Kevin Warsh's claim that the AI boom will enable rate cuts. And I find it just implausible to suggest that by the end of this year, AI would produce such increases in productivity that it could reduce in a rate cut to below 1%, and you can't tell me that that would very likely increase prices.
So, Senator, can I say two things? First,
Senator,
sorry.
Quickly.
Sorry. Monetary Policy Center works with long and variable lags, quite famously. If the Fed were to make a decision today about the conduct of policy, it's likely to find its way to the real economy 6, 9, or 12 months later. So it's difficult to judge policy today for an immediate result. And that would be my only concern about the framing of your question.
Thank you, Mr. Chairman. In closing, this is what concerns me, is that your views now have sort of flipped to conform with where the President of the United States is. And that's been a concern many of us have. Thank you, Mr. Chairman.
I want extra time, Mr. Chairman.
I know, sir. I know.
Consider these 5 minutes of parliamentary inquiry. Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know. Okay. I think it's that thing you stick your hand in.
Yeah, kind of like this?
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend Senator Warren, and she, as my friend, suggested that, I wrote it down, you will use your power, you might use your power to bail out your friends if they get in trouble, kind of like President Biden did with Silicon Valley Bank and the Signature Bank. She didn't say the last part, I just did. Are you going to do that?
No, Senator.
Okay. The ethics folks, they've cleared you, but they've said you've got to sell some assets. Is that right?
Yes, sir.
Okay. And these assets that you have, you can't just hold a yard sale, can you?
No, not for most of them, sir.
Okay, so it takes a reasonable period of time, right?
Yes, sir.
And you've promised to sell them, right?
I did.
And if you don't sell them, we'll know and the ethics folks will know, right?
Yes, I'd be in violation of the ethics agreement if I refuse to sell them.
But you're going to sell them, right?
Yes, Senator, I will.
Okay. Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can agree, and it's not something that I would shy away from. I've heard many senators from this very committee in years past express strong views on interest rates.
Okay.
Humble central bankers should be listening and then making their own decisions.
But some politicians matter more than others. And generally speaking, presidents matter, their opinion matters more than, say, a senator. President Trump has offered his opinion about what you ought to do with interest rates. Is that right?
Senator, he has not made his opinion on that a secret to anybody.
Yeah. And every president has that you're aware of.
Yes, and they all tend to be in the same direction, Senator Kennedy.
Okay. Now, the problem is, can we agree that your credibility as Fed chairman is the most important thing you have?
It's the most important thing to me, it's the most important thing to the institution, and it's the most important thing to the successful conduct of policy.
Okay.
If the markets
that's a yes, right?
Yes, Senator.
Okay. The problem is that President Trump has said he's not going to appoint anybody who wouldn't agree to lower interest rates. Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
So the president has never sat you down, looked you in the eye, and said, here's the deal, Scooter, I'm going to appoint you, but you got to agree to lower interest rates. That didn't happen, or it did happen?
The president never once asked me to commit to any particular interest rate decision, period, and nor would I ever agree to do so if he had, but he never did. I was honored he nominated me. Like everyone else in the committee in the world, I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Okay. I've got one more question because I'm about to run out of my parliamentary inquiry time. I've heard your argument the last few months about artificial intelligence has made us so productive, labor so productive that companies don't have to raise prices. Therefore, inflation isn't a problem. Therefore, rates can be cut. Do you really believe that right now?
No, that is not how I would characterize the story on AI.
Okay, but you've said what I just said, haven't you?
I have said that this is the most disruptive moment in modern economic history in the U.S. and the world. I've said that artificial intelligence, AI, short
okay,
for
let
American
me stop you
ingenuity,
because
can have a big effect.
the chair's going to cut me off.
Oops, sorry.
Here's my worry, that a lot of this stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. Okay, I'd be careful there.
Yeah.
Thank you, Mr. Chairman. I'll get to my 5 minutes in a little bit.
Good morning, Mr. Warsh. It's still morning. Let me start with this. I think you have said that you have confidence that this economy has potential. I think that's fair to say. And you've also said that this is a time of great consequence for the nation's economy, perhaps one of the most significant hinge points in a couple of generations. That's fair to say?
Yes, Senator.
Thank you. And so I agree with that. And I actually want to go a bit further, because I think that it seems to me that this economy is amazing for rich people, people who have a lot of capital. And in fact, we can see in 2025, billionaire wealth grew 3 times faster than the average rate of the previous 5 years. And wealthy households hold a massive portion of the nation's wealth. And this, I think, is the tipping point that our economy actually faces right now. And I can tell you that in Minnesota, a lot of people are telling me that it is harder and harder for them to afford the basics. They aren't rich. They don't have enough money to pay their bills, to pay their doctor's bills. So I want to look at this with you for a few minutes, and I want to start with inflation. So last week, President Trump said that gas prices are, quote, not very high, and, quote, we're having some fake inflation because of the fuel. So understanding what you've been saying about data and measurement and all of that, let me just ask you, do you think that gas prices going up 20% is fake inflation?
Senator, the gas prices, like beef prices, eggs, milk, and the rest, they move, and when they move in the wrong direction, American people are hurting by it. There's no question about it.
That's right. American people feel it. It's not fake to them. It's money that they don't have in their pocket because gas is up 20%. I think my constituents would say that inflation is real and not fake. Okay, so let's look at unemployment. At the State of the Union, the president said, quote, the roaring economy, this is the quote, the roaring economy is roaring like never before. So do you agree with that statement? Is that how you see the economy, that is roaring like never roaring before?
So Senator, if I can clarify 2 things. One, there's a difference between the change in prices and inflation. The change in prices happen in a market economy. When inflation moves up, that's because the Fed had something to do with it. Now, on the state of the economy, I would say that the broad contours of the economy are improving. The potential of the economy, the real results of the economy are improving, but I think it can improve more, and I think in the years ahead, I think the economy's potential is strengthening.
So, the reality is that the economic data, understanding what you're saying about economic data being not imperfect, that there was almost 0 job growth in 2025. And so that looks to me like not a roaring economy. It looks like a weak economy, which is what my constituents are telling me back in Minnesota. Let me go to one last look at this. Around the country, the average cost of home insurance rose 12% last year. Now, in my home state of Minnesota, not a coastal state, premiums rose 34% in 2025. This is, of course, caused by extreme weather events, hail, floods, tornadoes, hurricanes, climate change. So is that inflationary, in your perspective? Is that increase in home insurance, property and casualty insurance, isn't that inflation?
So, Senator, if I can answer 2 questions that I think I heard, and we talked about both of these in your office. When we look at the payroll numbers every month and we ask ourselves whether it's good or bad, the job you gave to the Federal Reserve is to ensure we're at maximum sustainable employment. I think broadly speaking, the economy is running about close to full employment, though we never know what the right number is. So if Americans that want a job can find a job, then by the Fed's metric, we're at full employment. On the question of insurance premiums and the rest, when I look broadly across the economy, I would say when we look at health care, when we look at education, we look at housing, those prices have tended to go up more. In the less regulated parts of the economy, we've seen a downward structure, a downward change in prices, and we try to aggregate them the best we can.
But I'm not exactly sure what your point is there, but I would just say that my point here is that rising home insurance rates caused by increasing extreme weather events, climate change, is another inflationary pressure that people in my state are dealing with. And this, of course, the reason I'm focusing on this is because I'm worried that because of the pressure that you are going to be under from the president to lower interest rates, that this inflationary pressure that my constituents are feeling is going to get worse and not better. And so I don't have time to ask my last question, but it is literally this. The president has said that he demands that the next Fed chair will lower interest rates. And I take him at his word at that, and that is what causes me such grave concern here. Thank you, Mr. Chair.
In a 2019 interview with Bloomberg, you said monetary policy is important not for the decision it makes, but for reasons it gives for the explanations. Mr. Warsh, the Federal Open Market Committees or that the Fed sets U.S. monetary policy through interest rate decisions at those meetings, do you commit to maintaining the current practice of holding a meeting at least once every 8 weeks, yes or no?
Senator, by statute, as we talked about in your office, I believe the statute requires a minimum of 4 meetings, but 4 is not enough. So having more meetings than that is appropriate. But I've not even begun to look at the meeting schedules for 2027 and beyond, of course, subject to confirmation.
Okay. So then do you commit to holding a press conference at least on the day of the FOMC meetings?
Senator, right now press conferences are held periodically. If you ask me my true personal opinion, right now Fed chairs and other central bankers around the FOMC, they speak quite frequently. There is no lack of transparency. But I would say this, I think truth-seeking is more important than repetition. And if one has a press conference, one wants to deliver some important news.
Perfect.
So
and to follow up on
that,
then, would you commit to taking questions at those press conferences?
If a press conference were held, I think it would be incumbent to hear what the reporters of the day had in mind.
Thank you. I'm glad, our personal meeting regarding this was very enlightening. Earlier today, you said to Senator Kennedy that President Trump never demanded you to cut interest rates in your job interview. Is that your sworn testimony?
That is, Senator.
Okay. Well, someone here is lying then. Because it's either you or President Trump. Because in an interview with the Wall Street Journal of December 12th, President Trump confirmed that he pressed you on your commitment to support interest rates cuts. And I quote, during a 45-minute meeting with Warsh on Wednesday at the White House, the president pressed Warsh on whether he could trust him to support interest rate cuts if he were chosen to lead the central bank. According to people familiar with the meeting, Trump in the general interview confirmed that, repeating, Mr. Chairman, I'd like to enter for the record the Wall Street Journal article, December 12th. Trump says he's leaning towards Warsh or has it to lead the Fed. So, this brings up an issue of credibility at this point. Who's lying here? Is it you or the president? Because the president confirmed that he did ask you to cut interest rates.
Senator, there's, of course, a third alternative. You cite a couple of reporters for a leading financial newspaper. I recall reading that story at the time.
Did you issue a correction?
I think those reporters either need better sources or better journalist standards.
Did you ask for a correction?
There are things in the newspaper, Senator, I see all the time that don't strike my ear as correct.
So it is, in your opinion, that the president then is lying when he said he did not ask you?
I can only repeat to you, Senator, what I said to several of your colleagues.
So you did not? You right now, under sworn testimony, are saying just to right now that the president of the United States in that job interview did not ask you to cut interest rates?
The president never asked me to commit to interest rate cuts at any particular meeting over the period of my tenure at the Fed. He didn't ask for it. He didn't demand it. He didn't require it, and nor would I have ever done so.
So if these reporters come back and say to do another follow-up on this and they confirm what they heard, what will your response be?
Well, my response would be what I suggested to you a few moments ago. As I read that story in real time, I remember thinking they either need better journalistic standards or better sources.
So, here's my problem, Mr. Chair and colleagues. And Mr. Warsh, I think you're incredibly qualified. But a lot of us are actually worried about the integrity of the Federal Reserve. We're worried about what this means for the economic markets, and we're worried about what this means for inflation. We're worried about your independence, and now we're hearing direct contradictions whether or not you were directly asked by the president to cut interest rates, and you're saying no, and he's saying yes. And I think for a lot of us, there's a question now of credibility. And I think there's a real reason why many of us are not voting no. As a matter of fact, until you verbally spoke to Mr. Kennedy and answered his question that he did not ask, the president did not ask you to cut interest rates, this was not even going to be brought up. So there's definitely right now a true question about who is lying here. It's either you or it's the president.
Good afternoon, Mr. Warsh, and thank you for meeting with me last week. In August of 2025, President Trump tried to fire Fed Governor Lisa Cook for unsubstantiated allegations widely believed to be politically motivated. Thankfully, both a federal district court and the D.C. Circuit Court of Appeals ruled in favor of Governor Cook, preventing her from being fired while the investigation proceeds. This is a landmark test for independence. Now, Supreme Court Justice Brett Kavanaugh said allowing Cook's firing to go forward would weaken, if not shatter, the independence of the Federal Reserve. So I would like to ask you, will you commit to defending Governor Cook's tenure as Chairman Powell has done?
Senator, it was a pleasure to meet you in your office and spend time with you. As I said to you then, I'll repeat here to the broader committee, if I stand for anything, it's the Fed should stay in its lane. As I understand that matter, it's pending before the United States Supreme Court. I think it's inappropriate for me to weigh in on that, especially because in the event that I am confirmed, I could be a party to that matter.
Well, I disagree with Mr. Warsh. I disagree with you. This is your future colleague who was confirmed by both this committee and this Senate to serve her country. Chairman Powell has defended her tenure, and your answer to this is you will not defend her. Is that correct?
No, Senator, that's not my answer. My answer is there's a pending case before the Supreme Court, the results of which I think we're going to hear about soon. If confirmed by this body, I will follow the Constitution, the Supreme Court law, and the best of the Fed's tradition.
Well, let me ask you this then. Do you agree or disagree with Justice Kavanaugh on the Supreme Court, who said that her firing would weaken, if not shatter, the Fed's independence? Do you agree with Justice Kavanaugh?
So I took a constitutional law class, but I wouldn't say I'm worthy of being a Supreme Court justice. What I can say is Fed independence means everything to me.
And it means,
and that's exactly what I would try to do if I'm confirmed.
Well, I'd like to move on to the criminal investigation of Chairman Powell. The Trump administration could have taken many off-ramps to end what is a ridiculous exercise. Instead, they have doubled down. U.S. Attorney for the District of Columbia, Jeanine Pirro, sent prosecutors to the Fed last week to continue this circus, and they were turned away. Chairman Powell has said that the administration's investigation is not about any testimony or the renovations of a building, calling these arguments pretext, and he said that the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on its best assessment of what will serve the public rather than following the preferences of the president. So do you dispute Chairman Powell's assertion that the investigations are pretext for policy disagreements?
Senator, as I said with respect to the other case, this is also pending before the courts. I have a ton of confidence in the court's ability to make a final resolution. I'd abide by any judgment of the courts and would follow that judgment in the best of the Fed's traditions.
Okay, it's difficult. Let me just ask you another question instead. Just a few days ago, bless his heart, President Trump called Chairman Powell a stubborn, incompetent person who he said suffers from Trump derangement syndrome. Now, can you say before this committee that you disagree with this characterization?
Yeah, my disagreements with Chairman Powell are about policy, not about personality or personnel.
Okay, let me ask you another question about the president. Now, my colleague a moment ago said to you that the president, you said the president has never asked you about lowering interest rates, and you said he never specifically, is the word you use, demanded that you decrease interest rates. Well, did the president generally suggest this to you as well?
You know, in my recitation to your colleagues, I wasn't trying to be clever. The president never generally or specifically instructed me, suggested I should commit to any interest rate path whatsoever.
Okay, let me go to another point. So if the Senate does not confirm you by May 15th, the president may inject more financial chaos into our economy by illegally attempting to remove Chairman Powell and installing someone else until your confirmation. Now, the law is quite clear here. If there is a vacancy, the current chairman continues to serve as chair pro tem until the Senate confirms a replacement. But the Trump administration is gearing up to fight this assertion. And I expect every financial leader and reporter is watching your words right now, which can move markets. So I'd like to give you an opportunity to reassure them. Do you agree that the law requires the current Fed chair to continue serving as interim chair while this replacement is confirmed?
So I haven't been advised on that. I will say this. I was a summer associate for 8 weeks at a law firm, and that was the extent of my legal career. I'm certainly not capable of defining whether the Vacancy Act applies to the Federal Reserve or not.
All right. Thank you.
President Trump's nominee to replace his Fed chair, Jerome Powell, faced a lot of questions from lawmakers in the Senate. Happened on Capitol Hill this morning. We're talking about Kevin Warsh. He sat down for the Senate, answered a lot of questions, especially about his views on inflation and interest rates, things that really hit you in your wallet, right? Republican Senator Thom Tillis laid out his reasoning for voting against Warsh. Watch.
I'm not going to ask you anything. You can take a break and get ready for the bludgeoning on the other side. They're going to beat you till you bleed, and then they're going to beat you for bleeding. I'm going to talk about what's preventing me from being in a position to vote for you until we've spent time together in my office. You have extraordinary credentials. They're impeccable. I think the way you're dealing with the ethics issue is strong. Problem I have.
Live to Capitol Hill and CBS News congressional reporter Taurean Small. Maybe you can pick it up for us there, Taurean. He said, the problem I have. What are you hearing up there on Capitol Hill?
Yeah, the problem he has is with this DOJ investigation into Jerome Powell, the current Fed chair. He believes that this is a level of impropriety that would suggest that there is a pressure campaign from the Trump administration to get the Fed to react kind of in kind to the president's calls to cut interest rates at a steady rate. And that is something that, other Republicans have looked to distance the president from. That's even something that Tillis himself said, that he doesn't necessarily believe that this is from the president's direction, but he believes that attorneys at the Justice Department are leading this charge. But at the heart of quite a few comments to Warsh here from Democrats is the air of independence. Should he be confirmed by the Senate? And this exchange between Senator Jack Reed of Rhode Island and Warsh, I thought, was pretty instructive. Take a listen.
Do you suspect that he chose you because you indicated to him that you want to cut rates?
Senator, I don't know the reason for the president's choice, but I can tell you what I've been writing about for 15 years and what I said to the president, which is
I'll cut rates if you give me the job.
No, that's not what I said, Senator. Now, the president, as you might know, much like virtually all presidents I've either known or studied, presidents tend to be for cutting rates. I think the difference is President Trump expresses it quite publicly without surrogates or subterfuge, but presidents want lower rates. But Fed independence is up to the Fed. Fed leadership has to make a decision about what's the right thing to do.
No.
In my judgment,
you're a leader. You're the leader. You establish the moral and ethical standards and economic principles of the Fed. And you just pass it off to, well, it's not my job. It's everybody's job. That means it's nobody's job. Thank you.
Warsh's rich background as a Wall Street insider, on top of previously serving on the Fed Board of Governors from 2006 to 2011, is obviously something that's appealing to the president. But I think ultimately his alignment with President Trump on having the Fed cut interest rates is what made him so appealing to the president and to quite a few Republicans. One other thing to point out, if you noticed in that video, and hat tip to Armugo Adigwe for pointing this out, but NFL legend Larry Fitzgerald sitting behind him. Apparently, the two are friends. Nothing to do with this hearing, but just thought to point that out to our viewers.